If you have a small account and want to grow that account without using much of your capital, then this would be the perfect strategy to do that and the perfect stock setup that I have found. If you want to know more about this, then stick around and let's get started. Hi guys, this is Abhi and welcome to my YouTube channel. And this is a new channel, so I would really appreciate if you can give a thumbs up and subscribe so I can bring more content like this. Okay, coming back to the topic, right? So this strategy that I'm going to show is called call debit spread, and the stock that we are going to do today is Disney. So as you know, that Disney has been really kind of beaten down from its all-time highs, right? It's almost at a support level, a longer term support rather. So if you go to Yahoo Finance and see here, right, if you see Disney, this was almost the pandemic lows, right? And this has been hovering already. It has bounced back twice from this level, and there's a very likely chance that it may bounce back from this. It's almost near to that good long-term support, so that's why I'm choosing this stock. Again, before we go further, I just want to put a disclaimer: always do your due diligence. This is just one of the trade that I'm making, and it's also a good idea to only keep like do this with the 10% of 5 to 10% of your amount based on your portfolio size, obviously. Now let's see how you can actually execute this trade in Robinhood and how you can set up it for success. So once you are in Robinhood, you search for the Disney, and then what you have to do. This is a two-step or two legs and options, right? That you need to do to create this debit spread. So right now, Disney is hovering around $86, and I believe once it bounces back, right, there's a very good chance that it could go higher from this level for sure in next couple of months. Okay, so the way you set up the call debit spread is basically you first choose the expiration date. So you can do this since it is already beaten down and almost at the support level, right? You could do this with the leaps, but in leaps, right, you have to put a lot more capital. But in this strategy, we are going to mainly focus for a small account. So if you have a smaller account, this is a perfect alternative, you can say, for the leaps strategy. So in this, you select a longer term, kind of go, let's say, 2 months out, right? Let's say we go to October. Okay, and then that's the first thing that you need to do. After that, what you do is you basically sell a call which is further out of the money. So in this case, let's say we select 95. Okay, now what you do is you have to buy a call below that strike, okay, to make it a call debit spread. So you basically getting right now a premium of $121, and then once you buy a call, that makes it a call debit spread, right? Because you are paying here more than you are receiving, and this is how your graph would look like, right? As you can see, in this case, you are profitable right after the your break even point, right? You are completely profitable, and your max profit is 362, right? And you are just your max loss is limited to the amount that you are paying. That's basically your max loss. So your max loss is completely capped. You cannot lose more than this on this trade. However, there is a potential to gain a max of $360, right? And the max gain would occur if the Disney would go to your higher, that the strike that you sold, right, which is 95, right? If Disney moves higher than this, then that's where you gain the most. But beyond that point, your max profit is limited. Even if Disney goes to 100, you are going to get the max profit is capped here, right? Like you can see your max profit is capped. But if you look at from a ROI perspective, right? This is a very good return on investment. You are only uh, paying $138, but there's a potential to make $362 off of it, right? So that's a return on investment is very high on this. So now once you select that, then the next thing is you just execute this trade, right? You go continue. And there is again one more thing I want to talk about is the bid and ask, right? If you want to get it executed instantly, then you have to go with the ask price, which is 140. So that's the ask price. So if you want to wait and try to fill like on the bid price, it may take time, and sometime it doesn't get filled as well. So if you want to get really filled fast, then go with the ask price that you see here, right? So even the ask price is 140, so you are still in a very good position. Another important point is you don't have to hold this position till the expiry, right? So for to understand this better, I think let's go to the site option profit calculator, which I always use to kind of visually see how this trade would play out in a different time frame, right? In all the if tomorrow what would be the price, if what happens if the Disney drops, or what happens if the Disney moves up, what are you going to gain, right? So that this is a very good site to visualize and see where you are making the most profit, right? So on this, you first select call spread. That's because this is a call debit spread, right? And on this here, you say the ticker for Disney, which is DIS. You select the price, and then the first leg, right? The long leg, which is you bought the call, right? So in this case, you open the options chain. You go to 20th October, right? So you bought the call which was closer to the money, right? So we bought the call for 90, which was this one. So we select this. And then on the sell side, right, we sold a call. You again select the same expiry, and then we sold a call for 95, right? So this is the one. So that's what this is the same setup. This is basically the same setup what we did in Robinhood. And now what you have to do is you leave this stock price range as auto, and then you say calculate, and this is what your profit and loss would graph would look like. This is much clear, and visually you can actually see how much money you are making based on where the Disney price is moving on that particular day, right? So as the broadly you can definitely see that your winning chances for this trade is higher than your losing chances, right? So there are more chances for this trade to be that you would end up in a profitable side rather than you would end up in a losing side, right? So that's a good thing on the risk to reward ratio. Now let's see and understand this little better, right? So let's say tomorrow, if you say tomorrow, right? Today I'm recording this on 18th, right? Let's say on 22nd, if Disney is hovering around 87, right, which is just a $1 move from the current price of 86. So if on 22nd, if Disney is around 87, you are getting around $14, right? So and your this keeps increasing. If the Disney moves in upward direction, your profit increases along with the price, right? And if you let's take an example of September, right? In September, what happens in this case? In September, if let's say on September 21st, right? So on September 21st, if Disney touches $90, right, around $90, $91, let's say, you can close the trade, right? You would be getting around $51, and you can very well close this call debit spread for this much profit. So at any point in time, you can here come and see like what would be your profit before you opening the trade. I always like this to see visually like what how my trade would perform, right? By the way guys, if you have liked the video so far, please do give a thumbs up and subscribe to the channel. This is the new channel, and I would really appreciate if you subscribe. That gives a motivation to make more such videos. Okay, going back to the topic. Now let's talk about the loss, right? The profit side is good. Now let's take the worst case scenario, right? So for worst case scenario, as we saw in Robinhood, right, your max loss is capped whatever you paid. So if you paid 140 bucks for this trade to get into this trade, that's your max loss. So your max loss is always capped. If it is October and the stock is still hovering around that 86 to 87 range, then you lose the complete amount that you paid, which is $140. If you have done your own research and you found a stock but you think that you do not have capital to do that, then this would be a very good strategy where you are your max loss is basically capped, so you know how what is your max loss, but your max gain is almost double than that, right? So this is a very good strategy for a stock which is almost bottoming out. Those kind of stocks are perfect fit for a call debit spread kind of strategy, where you do not have the full capital to go into the trade, right? But still you want to make that trade and make some profit out of it. So this call debit spread is a perfect option strategy in those kind of scenarios. So that was the call debit spread in Disney. And again, you if you find a better stock where you can see the similar setup, then you can always you don't have to play this with Disney. If you have done your own research and you found a stock but you think that you do not have capital to do that, then this would be a very good strategy where you are your max loss is basically capped, so you know how what is your max loss. So that's what I wanted to cover guys in this video, and if you have any questions or comments or any other stock that you would want me to cover, please comment below and I'll sure to make a video for that. Do take care guys, and I'll talk to you in my next video. Happy investing. Bye bye.